the MPC is concerned about high inflation and higher rate hikes are on their way. And a panel is set to weigh sales tax on cryptocurrency next week. So all of these remain the key newsmakers. The US markets, okay, let's bring the US markets first up on your screen. And they kind of had a flattish, almost a nothing kind of a day. So no great cues. Well, a lot of gyrations, by the way, but kind of ended very, very flat. The other cues as well, or the other indicators, really nothing to much to write home about. Like you mentioned, crude, of course, and that has come off. But in terms of other, the yields or the dollar index or otherwise, okay, Bitcoin too holding and consolidating around that 20,000 mark. So almost hardly any moves there in terms of major cues. The SGX Nifty indicates a start, which I would reckon again be flattish to marginally lower as well. So no great shakes on that front either. So keep it at the back of mind. So about 43 odd points. Yeah. So hardly any moves there. Now, what was the trade like yesterday? We started off well, but we ended at the lowest point of the day. Select stocks did okay, but a lot of mid caps and small caps certainly came under pressure. In fact, the entire metals pack got creamed yet another day as well. So that was the long and short of what happened yesterday. And I think it laid home the point that we were trying to make yesterday, that expert traders are waiting for rallies to go short. I think that's what happened yesterday. Rallies are succumbing to bear hammering, with yesterday's close at the lowest point of the day not looking all that great. Yeah, let's move the trade setup plate. So rallies are getting sold into. That's part one. I think the small good news is that the cumulative monsoon rainfall is normal as of June 22nd, and that is a good sign, because I think about 10 days earlier there was a belief that, oh, could we be deficit by a significant percentage. Thus far, it's not looking all that bad cumulatively. Oil coming off is a big positive at the margin, but the global fears, of course, prevail. So don't quite know what kind of a rally could it happen. Remember, the last two, and of course, today oil sensitives will be the sector to focus on naturally. So, but viewers, the point that I want to make is there's a bit of a dichotomy here, in that the global counterparts, the BOFA Global, a couple of other global brokerages are all talking about not to fight the Fed and not to fight the tape, and let the markets course correct and let the trend get built and then buy. We've seen India houses, so CLSA's Vikas Jain or Mahesh Nandurkar, in some fashion, Bernstein, while they've given a lower target price, have said that there could be never know up moves. Yesterday, BOFA came out with a note saying that they have cut the December target of the Nifty to 14,500. So a bit of a bounce back conversation starting to creep in onto the sell side. In fact, Quant Mutual Fund yesterday released the Sandeep Tandon note, wherein they have also talked about how the fears are probably overdone and there could be a bit of a bounce. They're not saying that nobody's saying that, or nobody's able to say, or nobody's even thinking of saying that the downsides are over, but everybody's saying that there could be a bit of a bounce as well. So be mindful of that. In light of all of that, the stocks to watch. So obviously ONGC and Oil India, because oil has slid below the $110 per barrel mark on recession worries. So these two remain the preeminent plays. Yes, I think the BPs, HPs, IOCs of the world also, but these two predominantly. In fact, speaking of that, CLS has come out with a note on OMCs. They are saying that the Asian refining margins have risen by about $2 per barrel to $23 per barrel. Their tracker suggests a US $10 to US $15 per barrel QOQ rise in core GRMs of IOC, BP, HP, Reliance in Q1 FY23. A further rise in marketing loss of petrol and diesel may offset gains for IOC, BP, HP. According to them, Oil India and ONGC remain their top buys, as according to CLSA, they are pricing in sub US $45 per barrel of crude price. What they are effectively trying to say, viewers, is that current prices are reflecting earnings, which would be the case if crude was at 45. The fact that crude is at 107 and average prices would be probably higher as well, mean that ONGC, Oil India's earnings could be better. The question is, what do you track more for these companies? Do you track the prices of crude, the trend of crude prices, and does that dictate the pricing of ONGC and Oil India, or do actual earnings? The last 12 months, it's frankly been the trend, except for a few instances here and there, and which is why offbeat. We had an Oil India moving all the way suddenly from 211 to 230 rupees to 300 rupees per share as well, or 280, 298 rupees per share. But I would suspect that there could be a possibility that you might have a flattish kind of a move with a downward bias into some of these because of the way crude has come off. Let's wait and watch. Some stocks in news include a Bajaj Auto, IRB Infra, and Vodafone Idea. So Bajaj on the share buyback proposal on June 27th. It comes back. IRB Infra has gotten 310 crore rupees as part payment towards an arbitral award. And Vodafone Idea board has approved fundraising of up to 436 crore rupees. I think via equity shares of warrants convertible into shares, but essentially equity dilution yet again. Um, that's the problem for a V. Nevertheless, be that as it may, let's see what kind of funding comes in for them. Some other brokerage actions include a CLSA on IT services note, wherein they are saying that TCS is their top buy and the risk reward is very attractive for HCL Technologies. And systematics on Maruti Suzuki actually came in at about 1:30 p.m. yesterday, but I'm still bringing it. They have a sell, that downgrade to a sell with the target price of 6550 because they believe that the market share recovery will likely disappoint for systematics. Some AGMs today, which is HUL and Tata Elxsi, and you might well see notes from brokerages tomorrow. Keep these in the back of your mind. Depends on what they say at the AGM. Maybe there could be some bit of brokerage reactions as well. So let's wait and watch. I'll also watch out for HAL, by the way, viewers, Hindustan Aeronautics, because there's a newspaper report which says that India has emerged as the front runner for a Malaysian aircraft deal, some Tejas lightweight combat aircraft, and India has emerged as a front runner, and they will fulfill this through HAL. So HAL might get maybe some orders, and that could keep HAL in focus in the session today. There are some queries that are coming in. I can't answer stock specific queries per se, but there are views around. I mean, people are asking for RBL Bank, and then there's a question mark for Bajaj Finance, and there's a question mark for the sugar names. Well, in terms of RBL, at least I think brokerages had a mixed view. Some people cut the target price post a government. I think Motilal Oswal sales note that I was reading spoke about how this development is not in sync with what they had anticipated, and therefore they thought that the risk reward may not be in favor of people who have it. And now very difficult to pencil in event based stocks. Particularly, you could argue that with rising interest rates and hopefully lower NPAs, hopefully I mentioned, banks without events like ICICI Bank, Kotak, etc., might have a smooth run. Very difficult to call for something like an RBL, which has had this event as well, and you don't know what the focus of the new management will be per se, as also it's a government appointed nominee. So therefore, very difficult call to make really. What we'll try and do is maybe in tomorrow's trade setup, I'll try and get some of the brokerage reactions on this one, since there are a couple of questions on RBL. On sugar, again, I'm no one to say, but the fact remains that the news flow isn't the most positive of late, simply because of the export curbs, ceilings, etc. So in that, but the reported earnings, I reckon, will look very strong even in this quarter. So be mindful of that. Lastly, as I learned from a couple of guests who said that while diversification helps because there's a global bull market somewhere, everywhere. So I'm not saying there's a bull market right now in Indonesia, but it's a very interesting Bloomberg article that caught my attention and said that, and I didn't know about this, of course, I have not tracked it in such minutiae, but Indonesia stock market is the best performing Asia Pacific this year. And the reason why it could stay ahead is because the energy exporting strength coupled with a large domestic market shield it from a threat of a global recession. Simply put, coal, oil, and coal in particular for Indonesia, right? Because coal prices have done so well. Their largest miner has doubled in size or in market value in the last, I think, 2 odd months or so. So very interesting. Everyone else, people are crying for the portfolio losses, and Indonesia seems to be doing reasonably okay. Well, look out for diversification as well. Nevertheless, viewers, that's the long and short of it for the day today. Thanks so much for tuning in. Have a safe day ahead.
No,